The IRS is going to take more of your money if you don't pay them as you earn it, not next April. And trust me, they're not shy about it. They'll charge you interest too. This month alone, several people have come to me asking for help with tax saving strategies. Sure, I can help with that. But here's the kicker. More than half of them are dealing with thousands of dollars in underpayment and late payment penalties, plus interest. It's frustrating because these aren't people trying to avoid their taxes. They just don't know how the system works. I'm here to help, so let's fix that. If you're self-employed or a 1099 contractor, it's on you to pay the taxes throughout the year. No one's taking it out of your paycheck anymore. But don't worry, I've got a 3-step system that makes saving for taxes easy, avoids penalties, and keeps more of your money in your pocket. So the first step here is to figure out your safe harbor target. This is the amount you need to pay throughout the year to avoid those penalties. Now there are 2 ways to do this, a simple and a difficult way. First, use last year's taxes. If your income is consistent, this is the simplest method. So go ahead and pull out your tax return, check line 24 on last year's 1040, and that's your total tax liability. If your adjusted gross income, or AGI, was under $150,000, your safe harbor target is 100% of that number. Now, if your AGI was over $150,000, bump it up to 110%. Here's an example. So if you owed $20,000 last year in taxes and made less than $150,000, your safe harbor target is $20,000. If you made more, it's $22,000. Now here's the complicated method. If your income fluctuates, you can base your safe harbor on 90% of this year's estimated taxes, which could save you. So you want to add up all your expected income, subtract the deductions and adjustments, multiply the taxable amount by your estimated tax rate. That's your federal, state, and self-employment tax rates all added up. Now take 90% of that number. That's your safe harbor. So how do I do it? Now I like to keep it simple. So I use last year's taxes as my baseline because my husband's income is consistent as a W-2 employee. I subtract what his employer already withholds from his paycheck for our safe harbor target to calculate what I need to save and pay that through my business. It's simple, clear, and avoids surprises in April. Step 2 is to automate your savings with buckets. Now that you know your safe harbor target, it's time to save for it. I use buckets. Not literal buckets, but digital ones in my bank account. So here's how it works. Every time I get paid, my bank automatically splits the money into these buckets that I've created. First one, taxes. Now about 25 to 30% here goes for Uncle Sam and his friends. Then I have a savings bucket because even businesses need an emergency fund. Then I have my profit bucket. This is my yay, I'm awesome fund. And then I have owner's pay, which is my paycheck. And then I have the expenses to cover all of my business's costs. Now this all transfers automatically. So here's an example. If I deposit $10,000, $2,500 to $3,000 automatically moves into the tax bucket. This system ensures I'm always saving for taxes no matter what. Automation is key. It keeps me from accidentally spending my tax money on some spontaneous Target run because we've all been there. It also makes it easy to see exactly where my money is going, so I'm never caught off guard, especially in April. Step 3 is to pay quarterly taxes. The final step is to use that tax bucket to make quarterly payments. The IRS expects taxes as you earn income, so paying quarterly is non-negotiable if you're self-employed or 1099. But let me tell you that this isn't how most people do it. Normally they wait until April, sit down with their CPA, and then get hit with the total damages plus penalties. That's when the panic sets in. Listen, there are some great tax preparers out there, but most of them are absolutely drowning in work during tax season. They're not thinking about walking you through the strategies or holding your hand on how to make the payments. And honestly, that's not their forte. Their job is to take the numbers you give them, enter them into their system, and hand you the result. Now, if you want control, here's how to make your quarterly payments. You log into irs.gov and use their direct pay option. It's quick, It's easy and it ensures your payment goes straight to the IRS. Select estimated tax and the tax year. You can also pay through tax software or by mailing a check with your Form 1040-ES, your estimated payments. So what do I do to stay ahead? Well, in November, I review our total withholding, expected income, and the tax liability for the year. This gives me time to adjust before December 31st. Whether that means increasing my husband's withholding or making an extra estimated tax payment, it ensures I don't miss anything or give Uncle Sam more than he deserves. Now, Robin, what if I get a letter from the IRS? Don't panic if you get a letter saying that you still owe money. The IRS is notoriously behind on accounting for payments. They have one job, right? It's frustrating, but this is why we're so smart and saved our payment confirmations. With those in hand, you can confidently respond knowing you've done your part. The IRS will eventually catch up. Just stay calm and organized. And let's talk about this for a second. A lot of people rely on tax preparers who are doing the best they can during tax season. But most of them are buried under a mountain of returns and are focused on inputting numbers and filing them before the deadline. That's it. You're not going to get sophisticated tax strategies from the guy sitting at a folding table in the Walmart entrance. He's not there to walk you through your tax situation or help you reach your goals. And honestly, even the best CPAs are often not thinking about the big picture strategies because they've got such a short window of time to get everything done. There are much more sophisticated strategic tax planning approaches available, and I love diving into those. But let's get this straight. We're not going to pay the IRS more than we have to just because we missed a payment date. Staying on top of your quarterly payments is one of the easiest ways to avoid penalties and unnecessary interest. It's all about playing smart with what you already owe. Now, why this works? This system, finding your safe harbor target, automating savings, and paying quarterly has been a total game changer for me. It's simple, keeps me organized, and saves me money. Plus, it frees up more mental space for more important things, like deciding what snack to eat next. If you're ready to stop stressing about taxes and want help setting up a system like this, send me a DM or visit my website. Let's make a tax season a whole lot easier. Don't let the IRS take more than they should. Start saving smarter, paying on time, and keeping more of what you've earned. If you found this helpful, subscribe to my channel for more tax and financial tips. And if you're ready for a personalized plan, reach out. I'd love to help.